What up, what up, what up? Mr. M here, back again with another breakdown. It's been a little minute, been behind the scenes working as usual. If you don't hear from me, it's because I'm building. All right, so we're going to take a look at some stocks here off the daily and weekly time frame. So let's jump right in. Okay, right here we have Amazon, Amazon.com, obviously the juggernaut of all retail e commerce. Off the weekly time frame, we see we had this bullish activity last week, followed by a bearish candle. You see we're in this range here based off our Pip Hunter special indicator. Message me if you're interested. We're stuck in between here and now off the daily. We started trading below this EMA, and we'll see what happens at the pre-market, where we can potentially drop off and start trading below this level here. Um, it's going to be interesting because this week is non-farm payroll, so you're going to see a lot of consolidation and a lot of breakouts. Right now, the forex pairs are finally breaking out after a crazy FOMC about a week and a half ago. We had stagnation last week after those huge moves, and now we're starting to see those sells. So, um, should be interesting here as far as what happens with equities. If the dollar is gaining strength, usually those equities tend to pull back. Let's look at Tesla. All right, so Tesla is meeting this level of the trend line here off the daily time frame, which could signify a potential pullback if we start getting those bearish signals come back into the 640 to meet this EMA, even back to the 600. If you see on the weekly time frame, we are at a level of resistance here on that trend channel here. We do have like a little double bottom, and there seems to be liquidity in this region. But overall, we really would need to break above these channels, break above the 700 level to continue back up into these next regions of the 750. We should see more details today. Zoom has been on a tear, bullish tear off the daily. Once again, meeting resistance, but we're able to close above it, which is quite interesting. Also, Zoom off the weekly time frame, we had a significant pullback into this area of demand that we can see, and from that region, we then took off again. We had just missed the demand level, but at the same time, we are respecting this linear trend line. And if we draw this here, you can see that the trend's still being respected, and we had a pretty serious run from that point on. Very nice. All right, let's look at US 30. Same kind of scenario with all the stocks and indices. We had this pullback. Whenever we have a pullback on these indices, they get bought up. Whether it's the Federal Reserve, whether it's elites or investors, institutions, they buy these bottoms. You can guarantee it. As you can see, even if it pulls back majorly, they're still getting bought up. Look at the veracity in which it's bought up on the daily. Dipped in, and this candle right here just completely engulfed this last candle to break back above this level to continue trading higher. Off the weekly time frame, this candlestick formation usually signifies a significant breakout coming here in the stock market. So let's keep an eye on this. Obviously, use your technical indicators. This is not financial advice, but trade safely, use price action, and use your indication and your trend validation to get in the market. S&P 5 engulfing off the weekly. Again, the dip was bought, same type of formation, engulfing, ripped. NAS 100, same scenario, engulfing, ripped. Weekly, ripping. So be careful taking the other side of these markets. Calling tops and bottoms is extremely dangerous. Extremely dangerous. All right. That was stock market update. See you in the next one.